1. Overdevelopment and local government debt dependence. Over the past 2 decades, many local governments in China became highly dependent on land sales to finance their budgets. Unlike in other countries, Chinese local governments often do not receive a significant portion of tax revenues, so they sell land to developers as a major source of income. This dependence on land sales led to rapid urban development and massive construction projects in less populated or rural areas, where demand for housing was often overestimated. Entire districts, called ghost cities, emerged, filled with high-rise apartments, shopping malls, and office buildings, but with few residents to fill them. These empty cities were often intended to stimulate the local economy, yet without enough people and businesses moving in, they have become symbols of overdevelopment. 2. Demographic shifts and a declining workforce. China's aging population, exacerbated by decades of the one-child policy, has created demographic pressures that significantly impact the real estate market. The younger generation, who would typically drive property demand, is shrinking in numbers compared to the older generation. This decrease in the working-age population leads to lower demand for housing, as fewer young people are looking to buy property, particularly in second- and third-tier cities with fewer job opportunities. Furthermore, many people who might otherwise buy homes in these areas prefer to migrate to first-tier cities, e.g., Beijing, Shanghai, for better job prospects and quality of life, leaving smaller cities with more unsold properties. 3. Real estate as a speculative investment. For years, real estate was one of the most popular investment choices in China. Many Chinese families saw property as a secure way to grow their wealth, leading to speculative purchases. Investors, rather than people who intended to live in the units, bought multiple properties, driving up prices in certain areas. This speculative buying pushed prices to unsustainable levels and created artificial demand in areas that otherwise would not have seen much interest. However, as market conditions changed, with property prices stalling or even declining, speculative demand dropped sharply. Many investors are now stuck with properties they can't sell without incurring losses, which in turn depresses the market further. 4. Economic slowdown and post-COVID-19. Impact: the Chinese economy has experienced slower growth in recent years, which has led to reduced household income growth and job insecurity, making people more cautious about making significant financial commitments, such as purchasing a home. The COVID-19 pandemic has only exacerbated this issue. Lockdowns, disruptions to businesses, and global economic uncertainty have all contributed to a more cautious consumer attitude. Many potential buyers prefer to wait, expecting further price drops, which further reduces demand and drives prices down. 5. Government intervention and housing market cooling policies. In recent years, the Chinese government has implemented several policies to cool down the housing market and curb speculative buying. Measures like limiting the number of properties one person can purchase and increasing down payment requirements have reduced the number of potential buyers, especially speculators. Additionally, the government introduced property tax pilots in some cities to discourage people from hoarding multiple properties and increase the carrying cost of unused properties. These policies, although aimed at stabilizing the market, have inadvertently discouraged investment in certain regions, further dampening demand in already overbuilt areas. 6. The rise of the rental market and changing consumer preferences. The younger generation in China is increasingly opting for renting over purchasing homes. High property maintenance costs, combined with the reality of long-term housing debt, make ownership less attractive. For many, renting provides the flexibility they desire, especially if they are not sure where they'll want to live in the long term. This trend is more pronounced in areas with limited job prospects or social infrastructure, like ghost cities. Additionally, with the increased availability of rental units from previously unsold properties, the rental market has become more accessible and competitive, allowing young people to enjoy a high-quality lifestyle without the long-term financial commitment of homeownership. 7. The challenge of phantom infrastructure in ghost cities. In many ghost cities, the infrastructure, though modern and extensive, is underutilized. Roads, public transportation, shopping centers, and other amenities are built, but without people to use them, these developments struggle to generate enough revenue to remain viable. This phantom infrastructure contributes to the cycle of low occupancy and economic stagnation. For residents who do move in, the lack of a vibrant community or business activity can be unappealing, discouraging further occupancy and leading to the area's continued desolation. 8. Regional economic disparities and urban migration patterns. China's economic growth has concentrated heavily in certain regions, with first-tier cities like Beijing, Shanghai, Shenzhen, and Guangzhou seeing significant economic opportunities and wealth accumulation. This has led to an ongoing trend of internal migration toward these major cities. Smaller cities, particularly those in less economically developed regions, struggle to retain or attract residents. The lack of economic prospects in these areas means that even with lower property prices, there is little appeal for people to buy or live there, as job opportunities and social amenities are limited. In conclusion, the combination of overdevelopment, demographic changes, economic shifts, speculative investment practices, and government policies has created a complex situation in which real estate prices in many parts of China are falling, yet there remains insufficient demand to absorb the available housing stock. For China, the challenge lies in finding a balance between stabilizing the housing market and ensuring that new developments match genuine demand rather than speculative or administrative targets.